Hi, my name is Rex Miskin with Miskin Benefit Group. Welcome to our webinar about questions you should ask when considering group health insurance. I'm available live to answer any questions. Please use the chat button in the lower right-hand corner of the screen. Well, I'm going to jump right in. First, let me give you a checklist of questions to think about. Then I will dive a little deeper. Some of the questions that employers find are important that they're asking themselves is that, are my employees struggling with getting health insurance independently? In the past, in previous years under the Affordable Care Act, I believe that it has been easier than what they're finding this year in the Colorado marketplace. They are finding their options to be much less than what they were in previous years, in particular with respect to their doctor selection has become much more limited than what they've had in past years. Additionally, many of your employees have also found the cost for individual has increased to the point to where buying a similar group plan is actually less expensive often than an individual plan. What this means for you as an employer as well as for your employees is your employees may have a strong wish to have coverage through an employer group, and you may also find a benefit in terms of it may increase your ability to attract and retain the best employees who you want and need to retain to run the business in the best way that you can. Another question that comes up often is, do your employees view health benefits as valuable? In the vast majority of the cases, that would be yes. The importance of people having health benefits has even increased with the Affordable Care Act, providing a tax penalty for people who don't maintain what's considered to be acceptable health care coverage. So even for the people who aren't especially interested in it, even they have a strong incentive to be sure that they maintain ACA compliant health care. Some other questions that come up with employers often is, how much can your employees afford to pay each month for premiums? Premiums are primarily driven based off of age. A 60-year-old costs considerably more than a 40-year-old, and a 40-year-old costs more than a 25-year-old to insure. That is the strongest driver for health insurance premiums. But other things that affect it are what level of deductibles your employees would like to have, what out-of-pocket maximum they'd like to have, and what network. Larger networks cost more than smaller networks. PPO networks cost more than HMO networks. So these are issues that come up when you're looking at it. Also, as an employer, as you look at your workforce, very often it's the workers with more experience are often more valuable to you as an employer. Also, typically, because of the more years of experience, they typically are older, which also means that they cost more as well too, and yet they bring a lot. That experience is very important to the smooth functioning of your business as well too. And very often they're looking around for an employer who will provide them with good coverage that will meet their needs. One of the questions that comes up often is, how do I know if my employees qualify for a subsidy? That question varies greatly from one employer to the other. Generally speaking, the levels for the subsidies are set at a level that requires fairly low incomes on average for the group. But we'd be more than happy to check your group and see if your group would qualify for a subsidy from the government. In cases where that can be the case, it can help you lower the cost of your premiums. Some other questions that come up with employers is, if you're looking at offering it, it comes up frequently, if I do this, am I committed to this for the long term? Or in other words, if at some point I decide I don't want to continue to offer coverage and I'm offering it, do I have to continue to do so? The short answer to that is that for employer groups in Colorado with fewer than 50 full-time equivalent employees, the answer to that is no. You don't have to continue to offer it. You don't have to offer it, so you can offer it without being committed to doing this for the long term. Another question that comes up frequently is, if I choose to offer it, how much do I need to pay for the employee-only cost? In most cases, what you need to pay for the employee-only cost is $125 per month of the employee's cost. Now, some companies let that go lower. Some companies actually, there's a few that actually aren't requiring the employer to pay for any of it. But we can go through that with you on a case-by-case basis depending on which company you're looking at. For any of the smaller employers that are looking at offering coverage, a question that comes up frequently is, what if I'm just a business group of two with two owners? Can we get coverage for ourselves? The answer to that is it is difficult, but it might be possible. Again, it depends on what type of a corporation you are, how each of the owners is being paid, and so that one can vary depending on your particular situation. It also comes up sometimes, I'm a business group of one. Can I get coverage as a business group of one? The answer to that is no, you can't. As a business group of one, you really just have to go to the individual marketplace, and that's what you have to do if you have only one employee at the business. Another question that comes up frequently is, what are my competitors currently offering? It's no surprise that in the Denver marketplace right now, we're in a very tight job market, and the importance of being able to attract and retain your employees is running at a premium. A big part of that is the healthcare coverage that you provide, and it's a way that we're seeing employers continuing to focus in on offering healthcare coverage in a strategic way to attract and retain their best employees. It's a critical part of any running businesses, and we continue to find the businesses that are providing benefits to their employees have a lower turnover, and in my from my perspective, they seem to run more smoothly than the businesses that run much higher turnover. They seem to have a lot more internal difficulties with smoothness of the overall management of the company. So I think it provides a large benefit to you as an employer to take a look at attracting and retaining the best employees. Would you or your employees prefer to have a high deductible plan with low monthly premiums, or with a plan with higher monthly premiums but a lower deductible? This is a choice that is we see employer groups go both directions. We see some very highly paid firms where they choose to have the lowest possible deductible and pay for it all because they've decided that having their employees not hassle with any medical insurance is what they want to do. That certainly has a place. We have other firms where they're primarily wanting to provide something to make sure that they're helping their employees out to avoid a tax penalty. And with these, in this case, they typically go for a much lower premium, which is a higher out-of-pocket maximum. So it's not that there is a right or wrong answer to this question. One piece of advice I would give to you as an employer, though, is that you want to listen to your employees, but then I usually find that employers do best if they make a decision and then considering the needs and wishes of their employees, but make a decision and then let their employees know what the decision is and what the offerings will be. I find that when employer groups try to do it as where everybody has a vote, the employer ends up in a situation where you're always going to have somebody who's unhappy with the decision that you've made. And so my thoughts would be to not listen to everybody and consider their wishes, but then make the best decision that you can as an employer once you've considered these issues on behalf of your employees. Because with 10, 20, 30 employees, you will always have a couple of people unhappy with whatever choice that you make. Some other things that come up often are in scenarios where you or your employees have a large medical bill. What is the maximum out of pocket that they can afford to pay? If you've been watching healthcare at all over the last 5 years, you've noticed that the out-of-pocket maximum on most plans has increased from typically around $3,000 to today we're seeing most plans running around $7,100. It's a significant increase in the out-of-pocket maximum on the majority of the plans that are out there. That is not a small consideration. It's where the healthcare marketplace is at, not only in Colorado, but throughout the country right now. So you can buy plans with lower deductibles than that, but they start costing a lot more. But it is possible. Also, as an employer, it's possible to dual option. Dual optioning is where you put in effect 2 plans or more with one company. And then you let the employees choose which they would like. Typically, as an employer, you put in the base plan, which typically has the higher out-of-pocket maximum, and then you put in the buy-up, which has the lower out-of-pocket maximum. And most employers structure it in a way that if an employee chooses to buy up to the richer plan, they pay the cost for that. From my experience from doing this, most of the time I would say 80 or 85% of the employees will take the base plan, but a small percentage of them will take the buy-up. But in my experience, generally when that's offered, everybody feels a little more happy about the choice because they've been offered more choice and they've had the ability to make their own priorities based on their own needs and how much they're willing to spend on differing options. And so that's called dual optioning, and that's a good, I think that's a good way to go. Another option that you can come into as well, too, above and beyond that, is a thing called coexisting, and that's where you put in two insurance companies next to each other side by side. If you're interested in coexisting, that can only be done if we go through Connect for Health for Colorado, and you can coexist two or more carriers. I think the most common combination there is to put Kaiser in alongside of a PPO plan, because some people really like Kaiser, some people really like a doctor who's in their PPO, and sometimes you can run into a situation where that can't be accommodated. So if that's something that would be valuable, it is possible to do. Administratively, it does add some administrative costs to do that. The question is the extra choice worth the extra administrative hassle? And I have 17 years of experience with this. I can help guide you through what I feel is a fair evaluation of how much extra administration you're looking at versus how much benefit your employees are likely to find they get from that scenario. It's not a one-size-fits-all question there. Also ties into that is tax payments. In other words, if you as an employer are paying, say, $125 towards the employee-only cost, the employee is paying the rest, is that portion that you pay as the employer taken out on a pre-tax basis? And is the employee's portion taken out on a pre-tax basis? And the answer to that is that it should be done that way, but you do have to have certain tax form on file in order to do that. It's called a premium-only plan or a Section 106. You need to have those plan documents. They're not expensive, they're not difficult to do, but you do need to have those plan documents completed and on file before you start taking out premiums on a pre-tax basis. It's just the way that you need to have it done. Not terribly difficult or complicated, but you need to have it done that way. And it's also relatively easy to handle as well. Most accounting software, QuickBooks and so forth, has an easy button that you can select that will take out the premiums on a pre-tax basis. So that's even a further benefit in addition to the fact that group rates have, in most cases, become lower than individual rates for similar coverage. There's even other things that you can do as an employer to help reduce the employee's out-of-pocket cost without increasing your cost. Those can be called a health reimbursement account, and they're a place where you can, like if you pick a plan with a high deductible, but you want to shore up your employees if they do incur a large claim, you could use a health reimbursement account, which is a way that as an employer you can reimburse some or all of the out-of-pocket expense for the employee on a pre-tax basis. And that's another tool that can be used as well. Some other questions that you sometimes ask is how often do you and your employees go in for doctor's visits? That can vary a lot. Some plans have essentially no copays at all, where everything goes to deductible first. Other plans do have a copay where you simply pay your copay when you go to see the doctor. So both types of plans are available. It just depends. Most of the time you pay a premium for the plans which have a copay. Those cost a little bit more than the ones that send them to deductible. But it can be worth it. All plans in Colorado will cover preventive care once per year at no charge, so that's helpful to be aware of when you're looking at plans. Networks. I find most groups fall in one of two categories. Kaiser, as you know, is a big part of the Colorado marketplace, so if the group has a lot of people who like Kaiser, the group typically is interested in Kaiser. Also, if the group typically does not have a background or history of Kaiser, typically they want to stay with their own doctors who aren't with Kaiser. Either one of those can be accommodated there. Some other questions that we hear often from employers as well too is all of these things you may have already sorted through many of these issues on your own. You may have a group plan in place and you may not be getting the help or the service that you need in order to manage the plans that you have. We can help you with that at no cost to you. We can help you with COBRA letters. We can help you with, we're a full service agency. So if you are a client of ours and you have a termination, we will take care of the termination start to finish. If you bring on a new employee, we will receive the employee app, we will review it, we'll let you know if there's anything missing or incomplete that needs to be complete before we send it on to the carrier, and then we'll follow up to make sure that the enrollment is completed with the carrier, and then let you know when that's completed. Also, we'll work closely with either you, the owner, or whoever you have running the HR at the company to let them know what are the requirements the insurance companies have so that the enrollments and the terminations run smoothly. We also will make sure that, for example, when you do let an employee go, we either do the COBRA letter or the continuation letter in the right manner. We forward a copy to you for your review. That way you've protected yourself as an employer from the liability that you have when you let an employee go. So we don't just simply put a plan in place for you, but we also help you manage it in a way um, that you feel confident that your medical, your dental, and your vision have been handled in a way that takes care of your employees, takes care of yourself, and presents well to everybody who you're dealing with what you bring to the table. Um, so we've been doing this for a long time. Be more than glad to visit with you at no cost and no obligation. Um, we like working with people. We like working with our clients. So give us a call. We'd be more than glad to come out and just walk you through what we can offer, and be glad to make ourselves available as a resource for either now or down the road. And with that in mind, please call us with any questions.